Let's get more on Powell, the economy, the market impact. We're joined by Michael Farr of Hightower Advisors. He's also a CNBC contributor, and Lindsey Piegza is chief economist with Stifel. Lindsey, investors can be forgiven for having whiplash because in his speech a couple weeks before the Fed meeting, Powell was pretty hawkish. At the Fed meeting itself, he was seen as being much more dovish. I remember Dave Zervos' note where he was like, I'm blown away by how dovish this is. And now a week later, we have a hawkish pivot once again. Markets love to read a lot into these things, but they do matter. And what do you think is really going on here, or is the main takeaway?
Well, I think the market was misinterpreting what the Fed chairman said during the press conference. I think the chairman really maintained a pretty neutral stance that, look, inflation has come down from peak levels, but we still have quite a ways to go. But he did step up that rhetoric, as Steve just read, in that IMF conference or in that IMF commentary. So really undermining the notion that the Fed is willing to take further action. Now, they left the possibility of rate hikes on the table, further rate hikes on the table in that November statement, but the markets seem to just completely dismiss that, anticipating the notion of now rate cuts as we look out to the next policy move. But here the chairman was very clear. The economy is solid. If it continues to outperform, if inflation remains above expectations, the Fed is not going to hesitate to take a further policy stance, a firmer policy stance with additional rate hike or hikes as needed.
And Michael Farr, think this will have long-lasting reverberations for the market, which had been on this win streak really going back to and through the Fed meeting. And do we throw that out the window now?
Well, 2 weeks ago, it was an awful week, and everybody was down, and stocks were going down. And then the following week, of course, it was Katie bar the door, and everything's great again. So the market has been fairly mercurial, I think short-term emotional, more often here lately than not. I think Jay Powell was probably a bit surprised, and he's in an awfully hard position, but a bit surprised to go through his presser and have such a bullish reaction, to say that maybe we're going to stop and we're going to slow down. And as soon as he indicates maybe they're getting close to done, stocks go up. And that creates more inflationary pressures and wealth effects that he's trying to fight. Today, a more hawkish tone. And I think clearly data dependency has been what they've been trying to get across. So I tend to believe him. And I think this higher for longer is the real theme. So I would listen to Steve and I would listen to Jay Powell. It doesn't look like the threat of another hike is gone for good.